The mining charter was supposed to come up for review this year, which it has done. Yeah. I haven't seen the document, but what they've decided to do is retain the targets that they'd set in 2002. And this charter predates any form of BEE as we understand it, as far as broad-based black economic empowerment and the BEE Act is concerned. So it's something that the mining sector is quite used to and has been quite used to since 2002 or 2003 when it was promulgated effectively, because it's part of the Minerals Act.
So effectively there is some sort of a memorandum of understanding between industry and the government, and I know that they have a stakeholders agreement in the sense that industry has pledged to meet some of the requirements of this mining charter. But for investors overseas, they're thinking this is highly unrealistic to say that by 2014, 26% of South Africa's mines should be black owned.
Well, they set two targets. They set 14%, I think it was, for 2009, which wasn't met. Then they decided to review it. There was talk about taking the 26% has always been the 2014 target, but there was talk about perhaps raising that or adding in a broad-based aspect, because the big problem was, of course, the usual people were doing the deals and getting wealthy and all that kind of stuff, and the communities themselves weren't benefiting it. I don't think that the international community is too concerned about BEE targets and things like that. I think what they are a little bit concerned about is consistency. So when you read that Bank of America Merrill Lynch article, they raise a couple of points. The first point is well, there is the BEE target, but they can deal with that because they have dealt with it over the last 7 or 8 years. The fact that Eskom is unreliable power source is a big problem to them. The ICT, Imperial Crown Trading, and Kumba thing is huge cause for concern, where you have an established mine that suddenly gets its mineral rights taken out from under it, which is a complete violation of the Act anyway. So I don't think that I don't think the BEE in itself is a problem. But there's another issue that's come out, is the minister has been quite steadfast in terms of the ownership target, that it must be 26%, and if the black shareholder exits, then you must go off and get another black shareholder to retain that 26%. And I think that's also a problem, because these deals cost an incredible amount of money. And that's not specifically in the mining sector. That's across the board. The banking sector is one where, for instance, ABSA, their shares vested. A lot of shareholders got the money that they had initially invested in, and now ABSA's BEE score and ownership, technically speaking, has dropped. So now what does ABSA do? Go off and finance another deal? And what would the shareholders say about that? So there just doesn't seem to be a consistent approach or sentiment from the government in that respect.
All right, other issues to come out of the review of the mining charter, and we don't have to focus on it in detail, were questions around voting rights and raising credit for the black shareholders. Now, this takes us to the latest suggestion for a company like Anglo, for instance, to split its international and local assets into two, so that the South African entity operates fairly autonomously, can raise money independently, and effectively giving a lot more voting power to the South African constituents. What do you make of that?
I can't really see what the impact of that would be at all, because it's very, very clear that the ownership is of the local operation. So they'd have to split the operation up and say Anglo South Africa is worth 400 billion and Anglo International is worth another 2,000 billion. Yeah. And we only need to raise 400 billion. So I actually don't see, in terms of voting rights and all that kind of thing, what the splitting is going to do. I think what Bank of America was really talking about was the fact that perhaps it's a safer bet. And when you read the report, they show actually how South Africa's investment in mining is in negative territory at the moment. And whereas in China, it's 19% of GDP or something like that. So I think they just think it's a lot safer for them to separate it, so that if South Africa's inconsistencies continue, then the investors at least know that they know what they're in for, because it might take the whole of Anglo down, theoretically.
Agreed. I think the fact that you always get these changes and you don't get clarity in how the legislation is actually going to be applied. Investors just generally want to apply a much higher discount rate. And if that continues, eventually it's a position you actually want to mark down in your portfolios, which I think is where the real pressure is actually coming from. So if you can find a way to separate the assets that you are confident about from the ones that you're not so confident about, I think that's the aim that they're sort of going for.
Right, let's move away from the technicalities of how it affects the share price, and in this instance the Anglo share hasn't reacted to any of this news in any way, shape or form. But let's go to the philosophy that drives this, because this is why this becomes a highly emotional issue. There is, without a doubt, an unequal, disparate economy, black and white, and that's a hangover of apartheid. And given that black Africans constitute the majority of the population at over 80%, there is a significant and a real need to try to correct that imbalance from the past. And this is where BEE comes into the fray, is by saying any major transaction, any seizure of a national asset has to involve black partners, and you have to talk about black equity. We may, rejig the numbers, but that's essentially what drives all of this. And mining in a mining economy, the hallmark of the South African economy, becomes the nucleus where all of these issues are going to play themselves out.
Yeah, I think perhaps at the time when they put that stuff together, or those charters together, the mining was a greater contributor to the economy. It's not as greater one. But what they've done in the mining charter, which is very different to broad-based black economic empowerment, is they said if you want to mine, you need to apply for a mineral license or whatever that license is. Forgive me, it slipped my mind. You need to apply for that license, and and in order to apply for that license, you need to fulfill a series of conditions. And the equity thing was one of the things. And it was a document that just predates any form of BEE thought. Or contemporary thought. So they rushed through it, and everyone just said, okay, well, you want 15% by 2009, we'll get it. And then again, it was in a boom economy that those kinds of targets were set. So they were absolutely achievable. It was all financed by debt. And then, of course, last year, when the global meltdown, suddenly all of these deals went underwater, and some people had to exit, and black shareholding was diluted, which is just a natural economic phenomenon. But to come back to the theory, yes, there is an issue with the percentage of the economy that black South Africans own, and I think we need to be very clear about what is black in terms of almost all legislation since '98. It's African coloureds and Indians, which is about 95% of the population. There is an issue, but I think that the focus has been so heavily on who owns what and what owns who and how much do you own of, that they're kind of missing the point in terms of how about building up new businesses that employ more black people.
Okay.
I could go on a soapbox about this actually all night if you gave me half a chance.
No, not all night, but you must go on a soapbox. That's why you're here as our commentator. But Fungai, here's an interesting issue which Paul is raising. We talk about diluting black shareholding, but it's not a function, as he sees, of the investment dynamic around BEE. It's actually a function of the global credit crisis and credit drying up and liquidity drying up and black consortia not being able to raise money. That's what he's saying is the one issue. The second issue is the mining sector in decline, particularly gold mining, where we've fallen in the global rankings of production. Volumes have dropped and the cost of production have risen. And so the incentive to go into mining is less because the economic argument for mining investments isn't particularly strong, and it's not a racial argument. So when you add to that BEE as an additional criteria, it then adds an additional impediment to those who already are a bit concerned about the risks of moving into the mining sector. We're having this big argument for an industry that some people would say is beginning to show the signs of distress.
Well, I think some of those points are particularly valid. What it does mean, however, is whatever precedence is actually set within the mining sector could easily be scaled into other parts of the economy that are performing far much better. So I think from that point of view, it's very important to ensure that this is actually done correctly and in a manner that is sustainable and also scalable to other parts of the economy. I mean, ultimately, any part in the world has some form or other of local participation in any of the business that is deriving benefit from the assets of the country. And that's perfectly fine. I think, as Paul has mentioned earlier, it's consistency, it's clarity, and that's all that investors ask for, so that they can plan and actually invest over a long-term horizon.
All right, let's move into another sector, and the announcement today of a big MTN broad-based empowerment deal, 8.1 billion rands there, valued of this deal, 4% equity in MTN South Africa, and then indirect black ownership would be about 29% of MTN South Africa. What do you make of this one?
That's interesting. That means that MTN has achieved the target set of 25%, which is set by the Department of Trade and Industry for acceptable black ownership. They're pushing up for another 4%, kind of heading towards more what the ECT Act talks about. They talk about a 30% equity thing. So is that the reason why they're doing it? Quite fascinating. Actually, it's quite heartening, because most companies that do deals will say, what's the target? 25%? Right, 25%, that's it. And here they're saying, no, well, so could be that perhaps the ICT Charter, which has been on ice for a long time, mothballed in fact, might be coming out. There might be something like that. Perhaps that target is different. I don't know. It is interesting.
And going back, Fungai, to this whole issue of separating ownership of the local and the international assets, here it's indirect black ownership of MTN SA, and yet we know that MTN derives a significant proportion of its income from its international operations, so none of that being affected.
Well, ultimately, the locally listed business actually owns the various assets that MTN owns across the continent and indeed the world. So to that extent, those assets would be affected as well. And those businesses also benefit from the management expertise that those subsidiaries would actually derive from the South African-based business. But I think it is a step in the right direction, where a company can be proactive and actually be the ones to come to the fore, to come up with a plan. I think they've done well in terms of the structure that they're using to sort of house that particular ownership in a separate entity, and how people participate in that entity becomes a separate issue from the ongoing issues in the business.
I know that we've just about run out of time, but you're an Africa expert and you do a lot of business in Africa. I know Nigerians always say, we run our country, we don't need be in Nigeria, we are absolutely in charge. But are there other lessons that South Africa can learn in terms of local shareholding from other African economies?
Well, I think the legislation obviously is something that a lot of African economies have actually been putting into place to try and get that local participation in. One of the key issues, or one of the key tenets of Nigerian legislation, is the fact that they've put in creeping targets. Granted, the deadline dates have actually been moving from time to time, but they have put those in place, and central bank has also come into the fray, trying to improve access to capital for those locals who would want to participate in those various businesses. So at the end of the day, it's arm's length, it's on normal business principles, and I think people participate with the profit incentive in mind, and I think that's something that a lot of investors would like to see.
I concur.